So, what happens if the appraisal of the property you're thinking of buying comes in too low or too high? What do we do with that information? Hello, everyone. My name is Krystle Patrick. I'm a real estate agent here in Maryland with Cass Realty, and welcome back to my channel. So, we've been embarking on a home buying series where every week I come to you and we talk about the home buying process step by step. So, we're now nearing the end of the home buying process. Today, we're going to talk about an appraisal and the underwriting process. What's the lender looking for when they do an appraisal, and what is the underwriter doing? These are the questions that I'm going to answer here in this video. So let's talk appraisal and why the lender think it's necessary. So when you're getting a mortgage loan, the lender is going to require to get an appraisal done on the property. This is so that they do not lend you more than what the property is actually worth. An appraiser is not the same as an inspector. They're not inspecting the house inside out. They're not zooming in on every intricate detail of the house. What they are doing, though, is they're comparing the prices of the sold properties in that area. They're looking at the location of the property, the size of the property, and the overall condition of the property. This report then helps the lender determine if this property is actually good collateral for this loan that they're about to approve you for. So, in short, the appraisal is making sure that you and the bank is protected and making sure that you're not paying more than what the property is worth. So what happens if the appraisal of the property you're thinking of buying comes in too low or too high? What do we do with that information? If the appraisal of the property that you have put in an offer on comes in higher than the amount that of the purchase price, that is good. It means you're starting off on a great opportunity to have equity already built into that property. So, for example, if the property that you put in an offer for is 300,000 and then the appraiser comes in and say, well, it's actually worth 350,000, you've already started with property that has potential for equity. So if you buy that house, it's $300,000. The appraisals say, no, it's actually $350,000. And then let's say the property value stays the same and you decide to sell your house within a year. You already will pocket $50,000 just by getting a property that's actually worth more than you purchase it for. Now, if the appraisal comes back as lower than the purchase price of that property, then we got some things to do. So, for example, with the same property being $300,000, the appraisal come back and say, well, it's actually worth $280,000. What do we do with that $20,000 difference? So, first of all, the lender will only offer you the value of the property, which would be $280,000. You do have options, though. You can renegotiate the sales price with the seller. You can split the difference with the seller so that you can bridge that gap. You can pay the difference in cash if you have it and feel confident and determined that this is the property that you want. Or even better, you can challenge the appraisal. You can challenge it if it has missed some key details in the comparable sales of the properties in the area and other factors. And if all of that fails and you have an appraisal contingency, you can walk away and get your earnest money deposit back. Now, once the appraisal is completed and accepted, we're now moving into the underwriting phase of this home buying journey. Think of this underwriting phase as the last big step. It's very crucial, very important step that needs to happen in order for you to get those keys in your hands. This is the stage where you go from being pre-approved to actually approved for your loan. So every step before then, you were considered pre-approved. This is the step where the lender determines if you are approved for the loan. Think of the underwriter as the quality control team for this whole loan process. This is the stage where they're going to request lots of documentation from you. And you being on time with their request will ensure that you actually make your closing date. They're going to verify your pay stubs. So remember in the beginning to get pre-approved, they ask you for your pay stubs information. Now in this stage, they're going to ask for even more because they want to verify your income. They want to make sure you still actually have an income, and they want to make sure it's the same as you had before to get your pre-approval. They're also going to look for bank statements. They're asking you for bank statements to verify your assets, to verify that you have your down payment and your closing funds all ready to go. They're going to check your credit again. Just as how they checked it in the beginning to get your pre-approval, they're going to check your credit to make sure there were not any other inquiries. So make sure when you start the home buying process, you do not do anything to get your credit checked. They're going to re-verify your employment status. So they want to make sure you're still employed. Now, if there's a situation that comes up where you might be changing jobs or getting a promotion or anything along those lines, talk to your lender first, okay? Make sure you reach out to the lender to get their advice on what you should do and know the impacts on if you actually do change jobs. So speak to your lender. They're also going to review the property details. They're going to review the appraisal and the title reports of the property. In this review, they're checking for accuracy. They're ensuring that the I's are dotted, the T's are crossed, and everything is good to go. Now, I mentioned these throughout the video, but I really want to reiterate. These are the things that buyers do that can actually slow everything down. Do not go and open any other credit cards, line of credit, whatever it is. Don't buy new cars. Don't buy furniture. I know you're excited for your new place and you already have the vision of what you want your house to look like. It could wait until after closing. If you can avoid switching jobs, taking on a new role at your job that's going to impact your income, please avoid it. If you can't, reach out to your lender before you make any decisions, because this could, in fact, have an impact on your approval, and it could also change your closing date for something further down the line. So make sure you reach out to your lender before you do anything that could jeopardize your approval process. Another thing is to also respond quickly to your lender when they're requesting these information from you. They're giving you a deadline to provide this information so that you can actually reach your closing date goal. So make sure if they ask for your pay stubs, if they ask for bank statements, make sure you provide that to them in a fast and swift manner. So in that way, everything will be happening on the timeline that it's supposed to. Now, I know the appraisal and the underwriting process can just sound so stressful, so intense, but keep in mind, this is all for your benefit. This is to secure your house. This is to secure your investment to ensure everything checks out before you close. That's it for today. Stay tuned for next week where we talk about the final walkthrough and closing day. Finally, we reach closing day. If you found this video helpful, don't forget to like, subscribe, comment, and share this with anyone you know that will benefit from this content. I appreciate you for watching and stay tuned for more. Bye.